Hello everyone, how are you? I hope all of you are doing really good. So welcome to another session of strategic management, and in this session we are going to start with our new chapter number 4, that is strategic choice. A very easy chapter, extremely easy, very basic things that we will be studying in this, right? And a few of the things we have already done in the previous chapters. So using that only we will be continuing. Now what is that this strategic choice talks about? I'll just summarize it a little bit. Strategic choice is that every business has a lot of strategies that they can implement, right? Different people have given the different set of strategies that if you are in a particular situation, follow this strategy. If you are in a particular situation, follow this strategy. If you are in the growth stage of the product life cycle, then follow this strategy. If you are in the maturity stage of the PLC, then follow this particular strategy, right? Then the strategies are being made at the different levels. Corporate level managers will make different types of strategies. Business level managers will make the different types of strategies. Every business unit requires a different type of strategies. For example, the Reliance, for the telephone industry, for this Geo, they will be following a different industry. For petrochemicals, they will be following a different industry, different type of a strategy, right? So there, for a business or for an organization, there are various types of strategies which are available. Now the business needs to make a choice, needs to make a decision that where are they standing right now, and according to that positioning, what is the strategy that needs to be adopted, right? Which strategy will suit them the best. According to that, they implement it. That is what about us strategic choice. It helps us in understanding that when to apply which strategy, right? That helps in the decision making for an organization, that where are they right now, and in that particular situation, what is the strategy that needs to be followed. Clear? Okay, so now let's start with this chapter, strategic choice. Introduction. The strategies are formulated at the different levels of an organization. This we have already discussed at the corporate level, business level, and the functional level. In the very first chapter we discussed about it, right? Strategy formulation involves the well thought of decision making and cover the actions dealing with the objective of the firm. Objective of the firm is what? The profit making, the sustainability of the over a long period of time. Then the objective of the shareholders, that is the maximization of the wealth of shareholders. Right here, if we talk about the firm, that is profit making. What is the objective of the shareholders? That is the maximization of the wealth of shareholders, right? And allocation of resources and coordination of strategies of the various business units for the optimal performance. So that is the main goal of the strategic formulation, that it is about taking the right decisions and the right actions which fulfill the objectives of the firm, the objective of the shareholders, the optimum allocation of the resources, the utilization of the resources, mobilization of the resources, coordination of the various strategies of the different business units, right? And these are being done at the various levels. Now Mr. Ambani, right, he has to coordinate the strategies which are there for the Geo. He has to coordinate the strategies which are there for the petrochemicals. So he has to ultimately, all the strategies, the major strategies are being formulated at the corporate level, and then they are forwarded to the business level and the functional level. Mr. Ambani will be looking after all the strategies, Geo also, petrochemical also. This is about strategy formulation, right? So important here is, under the strategy formulation, that is decision making and actions dealing with the objective of the firm, objective of shareholders, the optimum utilization and mobilization of resources, and coordination of various strategies taking place in the various business units. Okay, now top management of the organization makes the strategic decisions, which pan down for delegation at the middle level management, and finally the functional level managers execute the same with their team. So this point we have already studied in the very first chapter. The major strategies are formulated at the corporate level, that is the top level. Here the top level means the corporate level, right? The major strategies are formulated at the corporate level or the top level of the management. Then these strategies move ahead to the business level. From the business level, they will move down to the functional level. The functional level will be the one which will be actually executing those strategies, right? So now the strategic choices. Strategic choices says the businesses follow different types of strategies to enter the market, to stay relevant, right? So there are different strategies being adopted for the different actions also. One, how to enter the market, to stay relevant in the market and grow in the market, right? A large number of strategies with the different nomenclatures have been employed by the different business, right? Nomenclature means with the different names, they have been employing the various strategies. One business is employing with the name of ABC, another will be applying in the name of DEF. So the same strategies with the different nomenclatures, the different businesses have been following, and also suggested by the different authors on the strategy. For instance, William F. Glueck and the Lawrence R. Josh discussed 4 generic strategies including stability, growth, retrenchment and combination. Similarly, so this was given by William Glueck and Lawrence R. Right. Similarly, Michael Porter has given the various things, right? These strategies have also been called the grand strategies or the directional strategies. So different nomenclatures have been given for a same set of strategies. Whether it is the strategies related to entering the market, whether it is related to maintaining the market share, or whether it is related to growth in the market, right? They have been suggested by the different authors with the different name. And Michael Porter suggested the competitive strategies including the cost leadership, differentiation, focus, cost leadership, focus, differentiation, which we have just covered in the last chapter, which could be used for the corporates for the different business units. So there are various strategies which are available, which have been given by the various authors, which are being adopted by the various businesses, right? Beside this, we come across the functional strategies. In the literature on strategic management and business policy, functional strategies are meant for strategic management of the distinct functions such as marketing, financial, human resource, logistics, production. So we have discussed about the functional level, right? So at the functional level, each function is being considered as a separate set, right? HR is one function, accounting is one function, marketing is another function. So strategies are prepared for each and every function. For marketing also we will be preparing the strategy, for HR also we will be preparing the strategy. These are known as what? The functional strategies. That means these strategies which are formulated at the level of functional level managers, right? So these are known as functional level, functional strategies. These are formulated by functional level managers. Functional level managers, right? After that, he says we can classify the different types of strategy on the basis of levels of the organization. So here say how the strategies can be differentiated on 3 things, right? One is on the basis of levels of organization, that is the corporate level, business level or the functional level, the stages of the business life cycle, whether it is in the growth stage, introduction stage, then growth stage, then maturity stage and the decline stage, and the competition, right? So these are the 3 things on the basis of which we can decide that which strategies are to be formulated, which strategies are to be implemented on the basis of at what level of the organization you are operating, right? What is the stage of the business, whether it is in the introduction stage, whether it is in the maturity stage, and the competition that is present in the market. According to that, we can divide the strategies. Let's see what are the strategies given. On the basis of level of organization, corporate level strategies, business level and the functional level strategies, right? So this is how we can divide the strategies. Stages of the business life cycle, that is the introduction stage. Now what will happen in the entry or the introduction stage? You will go for the market penetration. You are looking to penetrate the market, right? You are looking for the new customers for your product. You are looking to establish yourself in a particular market, right? So you will go for the market penetration strategy. During the growth stage, what you will look for, now the product is booming, the product is growing, you have already established yourself in the market, now your business is growing, you will go for the expansion or the growth strategy. Right now, during the maturity stage, what will happen, sir? Your business is has reached at the top level, that is the maturity level. Now further growth aspects are not there, so will the expansion be beneficial? No, sir. Now what will you try to do? We have already studied about PLC, right? Product life cycle. That is what we are discussing here. At the maturity stage, what you will do, you will make every effort to stabilize yourself, to sustain whatever the market share right now is there. The competition will be quite high at this particular stage, and you will try to stabilize yourself. That let's stabilize ourselves now, right? Maturity stages, the stability strategy. Declining stage, now when the business is on the decline, the sales are not there, the demand is not there, so you will go for what? Either you will retrench, either you will go for retrenchment, that you will withdraw your product, right? Or you will go for the turnaround strategy. Turnaround, what is turnaround strategy? We will discuss in detail. That you will go for the product innovation and try to reinvent your product, reinvent yourself in the market, and again go to the introduction stage, right? So retrenchment or the turnaround strategy. All these strategies we will be discussing in detail. This chapter is all about these strategies. Then if it is based on the competition, then what will happen, sir? Competitive strategies you will follow. Cost leadership, differentiation, focus. Or you will go for collaboration strategies, for example, joint venture, merger, acquisition, strategic alliance. Either you will compete, right, on the basis of cost, differentiation and focus, or if you are not in a position to compete, if you feel that the competitor is quite on a high level and you are at this level, and the competition will not be able, we will not be able to compete with the competitor, so what will you do? You will shake hands with the competitor, right? Through joint ventures, through mergers, through strategic alliance. He says, let's collaborate and fight in the market together, right? So that is another kind of that is how the strategies can be divided, right? The different types of strategies being formulated for the different requirements. Above are the various types of strategies available for an organization to adopt. The organization adopts either of these depending upon their needs and requirements. That is what I told you, that there are various strategies which are available to the organization that they can adopt. So according to the needs, according to the requirements, according to at what level your business is operating, you can select the strategy. For instance, a startup or a new enterprise might follow either a competitive strategy, that is entering the market where a number of rivals are already operating, or a collaborative strategy, enter a joint venture with an established company. So if it is a startup, if it is a new enterprise, if they feel, if they have the resources to fight, either they will go for the competitive strategy, they will fight with the rivals and try to enter the market. Or if after the analysis, if they feel that they do not have the resources to compete with the bigger players are already established in that particular industry, they will go for the collaborative strategy. They will do a collab with them, right? However, majority of the startups are launched on small scale, and their main strategy is to penetrate the market and reach the break-even stage at the earliest, and later pursue the growth strategy. So if you talk about startups, the startups are the entry or introduction stage. What they will try to do, they will try to sell the product at the lower prices, right? Or they will try to differentiate themselves from the rivals. They are trying to establish themselves in the market. They are trying to penetrate the market, right? And once they are established, then they will go for the growth strategy. While a going concern can continue with the competitive strategy or resort to collaborative strategy to ensure the business growth. He says that startups will go for the market penetration, right? And once they are established, they will go for the growth. And once those are the old players of the market, that is the established concern. Going concern means the old market players, right? Old market players. Now what they will do, sir? They will continue with the competitive strategy. They have established themselves. Now they will compete, they will grow, and they might go for the collaborations also if they feel like at any point of time, right? So business conglomerates having the multiple product portfolios formulate the strategies at the different levels. Now there is a business, for example, the Reliance, multiple product portfolio means they are having the multiple products, they are into the multiple industries, they are into the telephone industry, they are into the petrochemical industry, they are into the refinery industry and all those things, right? So they have to formulate the strategies at the different level. The corporate level will formulate the strategies for all the business units, right? Mr. Ambani, Mr. Mukesh Ambani, he will be making the strategies for Jio also, for petrochemical also, and for others also, right? The business level, they will work on their individual business. With corporate, business, business unit and the functional level, the corporate level strategies are meant to provide direction to the company. The business level strategies are formulated for each product or process division known as strategic business unit, SBU. This we already discussed in the first chapter, sir. What is an SBU? Geo is one SBU, petrochemicals is another SBU. So the business level managers, firstly the top level, the corporate level will formulate the strategies which will give the direction to all the business units, right? That is company. For what is happening, sir, here? Here you have a company, right? At the top, what you have is, at the top you have a company. And this company is then divided into various SBUs, strategic business units, SBU, SBU, SBU. So top level will make the strategies here for the company, and then those strategies to give the direction to the whole company. Whole company means the Reliance. Then it will be Reliance Petrochemicals, Reliance Geo, Reliance Refineries, right? Then that is what? That is SBUs. Here the business level managers will operate. Here the top level management will make the decisions to give directions to the company, right? While for the implementation of the corporate and business strategies, the functional strategies are formulated in business areas like production or operations, marketing, finance, HR. Now, who will implement the strategies of the corporate level and the business level? Functional level managers have to implement the strategies. Every SBU is going to have the certain functions. HR function is there, accounting function is there, right? Then other marketing function is there. The similar functions will be here also, HR, accounting, marketing. Here also they will have HR, accounting, marketing. So they will have the multiple functions here, right? Now, this is the implementation part. This is what? This is the implementation part. For this implementation, what will happen, sir? The functional strategies will be prepared. That how to execute the strategies of the top level and the business level managers. In fact, the big corporates follow an elaborate system of strategy formulation, implementation and control at the different levels in the company to survive and grow in the turbulent business environment, right? So basically, what is strategy? First you will formulate the strategy, then you will implement the strategy, then you have to keep a check on the strategy, whether the strategy is providing the desired results or not, right? Whether the strategy is working as desired or not. That is what? That is the control of strategy. Clear? So at every level, the big corporates follow these three things: strategy formulation, strategy implementation and the strategy control at the various levels, at the business level also as well as at the functional level also. They try to follow this. Clear? Now the corporate strategies a firm can adopt may be classified into four broad categories. That is stability strategy, expansion, retrenchment and combination. So these are the corporate level strategies, right? Stability strategy, growth, retrenchment and a combination. Clear? What is a stability strategy? The firm, in case of a stability strategy, the firm stays with the current business and the product market, maintains the existing level of effort and is satisfied with the incremental growth. Now the firm is not trying to do something new here. The product has reached, or the firm has reached, the maturity stage. The things are stable now. The demand is stable now, right? There are no growth opportunities. So the firm is not trying to do something out of the box here. The firm says, whatever is the market share, whatever we are doing right now, the existing product, we are happy with that, right? something additional, whatever we get, a few customers will come, a few will go, we are happy with the incremental growth, right? Whatever the small incremental growth we will be getting from the new customers, we are happy with that, right? We do not want to just grow at a high speed. No, we are happy with the pace at which we are growing. Expansion. Expansion means here the firm is in the growth stage. Here the firm seeks, now the stability will take when it will be taking place when the business is in the maturity stage. Expansion will take place when the business is in the growth stage, right? Here the firm seeks significant growth, maybe within the current businesses, maybe by entering the new businesses that are unrelated to the existing business. So they just want to grow, right? They say we have resources, we have money, we just want to expand. Our business is doing really good. We will use the money from that particular business. We just want to grow. We can't say stay stabilized. We will expand our business. Maybe it is the existing business they might expand, or they might expand, or they might go for a new kind of a business, right? Retrenchment. Retrenchment is followed during the decline stage. The firm retrenches. Retrenches means they pull back the products from the market, some of the activities in some business, or drops the business as such through the sellout or liquidation. When they feel that the products are not profitable, or when they feel that the whole business is not profitable, they will sell out the product, sell out the business, right, to some other person. Now they retrench themselves from the market. They pull themselves out from the market. They are no longer the part of the market now. They are not able to serve the market, right? Or the product is no longer profitable. They do not have the demand. The profits are declining. So retrenchment means pulling back from the industry. Combination. Combination is when the firm tries to combine a few things, any of the strategies. The firm combines the above strategic alternatives in some permutation and combination so as to suit the specific requirements of the firm. So the firm may be in between the maturity and the growth stage. So at that particular point of time, the firm might go for some expansion, not a huge expansion, at the same time maintaining the existing share in the market. Right? So this is what? This is known as the combination of the strategies. So these are the basic 4 strategies that the corporate level managers definitely make. And these are the strategies now, the whole chapter that consists of these strategies, right? So the first strategy that we are going to discuss is stability strategy. What is stability strategy? He says one of the important goals of a business enterprise in the stability strategy is to stabilize. Right? It may be opted to safeguard the existing interest and strength, to pursue well-established and tested objectives, and continue in the chosen business path, to maintain the operational efficiency on the sustained basis, to consolidate the commanding position already reached, and to optimize the returns on resources committed in the business. So what they are trying to do is, they are not trying to do something out of the box. They say where we are, we want to safeguard our interest. We want to maintain the position where we have reached, right? We do not want to grow, but at the same time, we do not want to go down also. We do not want to go into the declining stage. We will make efforts. We will make every effort to sustain whatever we have attained right now, right? We will sell the same product. We will be trying to sell serve the same market, but whatever the resources, that it doesn't mean, now the stability strategy doesn't mean we are not going to do any action. We just sit back and relax and say, okay, the product is selling, let's do it. No. This strategy says you will make every effort. You have to prepare the strategies that how you can sustain or how you can maintain the existing market share. You do not want to go out of the market. You want to keep your commanding position where you have reached, right? You want the returns on the resources that you have employed. You want that your performance should be optimal, so that you are not, because when you are in the stability stage now, when you are at the maturity stage, there is every chance, there is every threat that if your performance declines, if that is not an optimal performance, the competitors are ready to push you out of the market. So that is another thing. You have to keep a check that your performance is optimal. You are using your resources optimally, right? You are trying to safeguard your interest, your market share. That is what you are trying to do in the stability strategy. Clear? A stability strategy is pursued by a firm when it continues to serve the same or similar markets and deals in same or similar products or services. They are not coming up with something new, right? They are serving the same product to almost the similar kind of a market, right? They are not trying to do something very fancy, or they are trying to push their sales. They are trying to come up with the new products. No, right? This strategy is typical for those firms whose product have reached the maturity stage of the product life cycle. That is what we told you, that this is applicable where your product has reached the maturity stage, or those who have the sufficient market share but need to retain that, right? Already having the market share. So what is your viewpoint? You will say that we have a huge market. Now let's first serve this market, right? We do not want to go in such a way that we procure more and more and more market and we are not able to serve the existing market. I'll tell you example related to this. During the time of GST, when the GST was introduced, as we are an IT firm, right? Yes, we have an IT firm. My father has an IT firm. We were into software development, right? We are providing the customized softwares here. In our area only, we do provide it. Now during the GST, there was an opportunity that we could have got many customers. Every day I used to get at least 10 to 15 calls that, sir, we need software, we need software. My father used to get at least 40-50 calls every day, because with the introduction of GST, every small person, every small shopkeeper needs to have a computer now, right? The GST invoice. But what we did was, we focused on the existing clientage. We focused on satisfying the needs of the existing clientage. We tried to stabilize. We could have easily gone for the growth at that particular stage, but we opted for the stabilization, because we did not want that our existing clientage, which was a big clientage, that they should be dissatisfied. Right? That is why they are saying who have a sufficient market share but need to retain that. How will you retain it? If you will be able to service it better, right? They have to remain updated and have to pace with the dynamic and the volatile business world to preserve their market share. Now they have to keep their eyes open. It is not like you have reached the maturity stage or the stability stage and you will just sit back and sleep. The product will keep on performing. No, you have to keep a check on the market, what is happening in the market, and accordingly you have to change your strategies so that you do not lose out on the market share. At least you retain that market share. That is what you need to do. Hence, the stability strategy should not be confused with do nothing strategy, right? It is not a do nothing strategy. You will have to do a lot of things. Ultimately, why do you need to do a lot of things? Because you want to retain your market share, right? Small organizations may also follow the stability strategy to consolidate their market position and prepare for the launch of the growth strategy. So sometimes the business says that we will stabilize right now, right? And behind the closed doors, we will make the strategies that how we can grow, so that the competitor doesn't get to know. The competitor feels like they are into the stability now. They are not in the mood to fight. And one day we will come like a volcano and we will come up with something which the competitors would not have expected. So these things, yes, the organizations do follow these things, right? So stability strategy is used for that also. That is, the stability is used as a launch pad for the growth strategies. For the deeper understanding, let's delve into the characteristics of the stability strategy. A firm opting for stability strategy stays with the same business, same product, market posture, and the same functions, maintaining the same level of efforts as at the present. So that is what I told you. They are not trying to push themselves beyond the limits. Whatever they are trying to do, they are trying to do the present conditions. They are trying to maintain their present conditions in the best way, right? Whether it is the serving the present customer in the best way, or getting a few new customers and serving them in the right way, right? The same product, the same market, same business, same functions, maintaining the same efforts. The endeavor is to enhance the functional efficiency in an incremental way through better deployment and utilization of resources. This you will have to do. Why? Because the environment is dynamic. You have to bring efficiency into your functions, because with the changing dynamic environment, otherwise you will lose your market share. You will have to keep innovating, you will have to keep find out the ways that how you can more efficiently utilize your resources and your functions, right? The assessment of the firm is that the desired income and the profits would be forthcoming through such incremental improvements in the functional efficiencies, that the desired income, we do not desire too much, but whatever is desired, whatever is required to maintain the existing level, that we will be able to achieve in the dynamic environment through enhancing our functional efficiencies, right? We might go for the new machinery part, which will increase the efficiency of the machinery, right? We might go for the repairs and maintenance of the machinery, which will increase the efficiency of the machinery. So that is what he says. We will keep on looking for the ways that how we can retain our share in the market, right? For that, the functional efficiencies, enhancing the functional efficiencies is of the utmost importance. Stability strategy does not involve a redefinition of business of the corporation. It does not involve the redefinition. Redefinition means completely redefining the business. Earlier we were making the mobile phone, now we are making the mic, right? Or we are now making the laptops. So that is redefining of the business, completely changing the business. No, we are staying with the same business. It is a safe strategy that maintains the status quo. Whatever the status right now is, you will be able to maintain that. It does not warrant much of the fresh investment. Much of fresh investment is not required. Yes, a little bit of a fresh investment will be required to enhance the functional efficiencies. As I told you, the repairs and maintenance will be required for the machinery, or a small part that is attached to the machinery that increases the efficiency. That is a small investment, but huge investment will not be required. The risk involved in the strategy is less because you already know how the market is behaving. You have been in that market for a long period of time. So the risk is less. You are playing a safe game. You are not doing anything out of the box. Whatever the tried and tested techniques that have been working for you since the long time, so you are following the same techniques, but at the same time you are looking at the environment, the dynamic environment, and you are looking for the ways that how you can cope up with that dynamic environment. Clear? While opting for this strategy, the organization can concentrate on its resources and the existing business of the product and market, thus leading to the building of core competencies. So if the business is not focused on doing anything extra, they can focus on the optimal utilization of resources. They can focus on what the existing product they are providing, the existing market, and in that particular thing, what they can make their strength. Right? Their strength can be the optimum utilization of resources. Now, slowly and steadily, they can go for the low cost to production also. That can become their core competency, right? Because now they have been in that line since a long time. They know how they can reduce, they can use their resources optimally, they can reduce the cost of production, and accordingly, they can sell at the lower prices, right? They can make their position better in the industry by not doing anything extra, by just focusing on how the resources can be utilized in a better way. The firms with the modest growth objective choose this strategy. That means those who are not running after growth, they say a little bit of a growth, we are happy with that. And that we will be able to achieve how? The little bit of a growth that is required or that is desired, how they will be able to achieve that growth? Through the functional efficiency, sir. Major reasons for the stability strategy. A product has reached the maturity stage of the product life cycle. The staff feels comfortable with the status quo as it involves less changes and the less risk. The staff, the company, the people working in the company, they are happy with whatever they have achieved and they don't want to take any risk further. It is opted when the environment in which the organization is operating is relatively stable, right? The whole environment is stable, the growth opportunities are not there, so they will stabilize. Where it is not advisable to expand as it may be perceived as threatening, right? The industry is that kind of in a situation where it is not advisable to go for the expansion, because in that case you might lose out on the investment also. After rapid expansion, a firm might want to stabilize and consolidate itself. Now I have 3 crore rupees. I invested 3 crore rupees in the expansion of the business, right? I purchased a land, I purchased a building for setting up for the expansion of my business. Now after that, what will happen, sir? Now I will stabilize, right? With whatever the resources I have, I will try to make the best use of those resources and earn now to get a return on that 3 crore rupees. Because I cannot be continuously in an expansion stage. I need to stabilize, I need to earn. Once I have the sufficient earnings, then I might go for further expansion. But once after the rapid expansion, I will stabilize. Now I will stabilize. I'll take a deep breath. Okay, now let's do the business. Let's get the return on this 3 crore. I do not have any other further money left with me. Now I want to earn, and let's see after earnings, if we get good returns, then we will see if we can go for further expansion or not. Right? So these are the major reasons for the stability strategy. Just read it, that why don't the startups aim for the stability? This we have already discussed. Just give a reading, and with this, the first strategy, that is the stability strategy, is done. Please revise whatever we have done till now. In the next lecture, we will start with the growth or the expansion strategy, and there are a lot of things to be discussed in that how you can go for the growth, internal growth strategies, intensification, diversification, right? How they are going, the vertical integration, horizontal diversification. So there are a lot of things. Conglomerate, innovation is there, then external growth strategy. This whole thing is related to growth only, right? So this is a huge topic, the growth one, but very interesting topic. So we'll take up in the next lecture. See you guys in the next lecture. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.